Hello everybody, welcome back to another valuation investing video, and today I'm going to be analyzing Alibaba stock. Over the past month, Alibaba has been surging due to the Asian markets also surging because of China cutting interest rates and stimulating their economy. So today I decided to analyze Alibaba stock using my 7-step stock analysis tool, and then at the end of the video I'm going to value the stock using a valuation calculator and determine whether or not we should buy Alibaba stock today. The first metric of my 7-step stock analysis is the trailing PE ratio. I want the trailing PE to be greater than 0, meaning Alibaba is making money. As we can see here, Alibaba's PE ratio is 27.94, so that is a check and shows that Alibaba is profitable. The next metric that I like to look at is the forward PE ratio. I want the forward PE ratio to be less than 30, meaning if we bought Alibaba today, we are paying less than 30 times their earnings. And as we can see here, Alibaba has a very low forward PE ratio, which is 12.8. That means we are paying only 12 times their earnings for the future, which is very low, and that is a great check mark for Alibaba. The next thing that I like to look at is revenue growth. As we can see here in this chart, I have Alibaba's revenue growth rate. We can see in the beginning it was growing insanely fast at about 40 to 50%. As of late, it has slowed down, but nonetheless, it is still a check mark and is greater than 5%. Then I like to look at the EPS metric. I want the EPS growing at greater than 5%, similar to the revenue growth. As we can see here, Alibaba's EPS has been pretty stagnant over the past 10 years. Alibaba's EPS growth is less than 5%, so that is an X. Now if we look at the shares outstanding, I want the shares outstanding to decrease. If shares outstanding of a company decreases, that means us investors will own more of the company. As we can see, Alibaba was diluting shareholders until around 2021, when the stock was actually tanking. As we can see, they have been buying back at about 5% rate as of lately, so this is a check mark. Then I like to look at the total debt divided by the equity. This shows the ratio of debt compared to the amount of equity a company has. We want this to be less than 1 or 100%. As we can see here, it is 22.8%. That means this is a check mark and shows that Alibaba is unlikely to go bankrupt. The final metric that I like to look at is the future EPS growth expected by analysts. We want this to be greater than 5%. However, as we can see with Alibaba, they are only expected to grow at a 1.2% rate, so that is an X. In total, we have 5 check marks for Alibaba and 2 X's. The final thing that I'm going to do is analyze Alibaba stock. I'm going to be using a value calculator to calculate whether or not we should buy Alibaba at today's prices. The first thing I have to do is predict the revenue per share growth over the next 10 years. Analysts expected 1%, but I think that's a little bit too low, so I'm going to put 4%. Then the net profit margin. As we can see, their net profit margin has ranged from 8 to 20%, so I'm going to go in the middle here and go at about 13%. Then we can leave the cash conversion rate at 100%. Then we go down to the terminal PE ratio. I'm going to leave this at 20. However, it could potentially be less just because of China's danger in their economy and just because they're a little more communist. Finally, I'm going to use a discount rate of 15% to ensure margin of safety. And as we can see here, Alibaba's fair value price is about $95. So if you did buy it before the stock surged, that means it looks like pretty fair valued. However, if you bought today, you would still make about a 13% return, which is definitely greater than the overall market, which is about 8%. So far, Alibaba looks pretty good. However, I do like to have a margin of safety, so I do think that if Alibaba got below 90, I would consider it. However, I'm a little cautious about China. But thank you guys for watching this video on Alibaba stock. Please hit the subscribe button and hit the like button. See ya.